Hello and welcome to the weekend review of week beginning 1st of December 2020. For disclaimer, please visit my website chartvideo.com/disclaimer. On the left side of your screen is the daily candlestick charts of Nifty. A small body was registered on Friday. It was a bearish engulfing pattern. Thereafter 2 days has passed, no major trend has been initiated either on the upside nor on the downside. By any means, on this type of formation, the low of this particular day, the day the bearish engulfing was formed, and the next day, whichever be the lower, should be the trigger for the downtrend. So by any means, 12,790 would be a level where I would look out closely. On the upside, as we all know, we are at all-time high, so resistances can be expected at psychological levels of 12,800, 900, 13,000, 13,100, 200 and so on. Till 12,790 is violated, we should consider the trend is still up. On weekly candlesticks, Nifty has formed a shooting star type formation. Well, here too, the confirmation needs to come up, and that too 12,790 is the crucial figure. Talking about supports and resistances, just immediately on the left hand side, a tabletop might have been created. So this particular level would be the first level which I would look out for, and when we go to the hourly charts, we will see this particular level clearly as a support point for the index as of now. On the lower side, if 12,790 is violated, the next swing low is at 12,730, and we have gaps at around 12,475. The final resting point in case the downside comes up would be at 12,025 odd levels. Will it come here or will it scale up? Will it continue to move up? Let us see one by one. Before moving further, here is a Fibonacci retracement, and 261% retracement comes to at around 13,473, which can be a target on an intermediate to long-term time frame. Mind it, Fibonacci retracement levels do not say anything about the strength of the trend. We are just discussing if the market continues to move up, the Fibonacci retracement level of 261%, which is at around 12,470 odd levels, should be watched out for. But by any means, I am not watching out that the market may move to that level. The uptrend in the index took place from beginning of November. For the first time, 13-day SMA was tested on this particular day of 26th of November. The slope of the 13-day SMA as of now is still up, though on Friday it seems some flattening out may have come. Now, this needs to be checked out for another day. If the slope remains up and index continues to find support at the 13-day SMA and moves forward, another bout of upside movement may come. But in case the index falls below the 13-day SMA, this should signal a resumption of an intermediate term downtrend. The slope and the value of the 13-day SMA both should be watched out for in coming week. From here on, let's move to the hourly chart of Nifty. What is it saying? Wow, मेरा favorite indicator ठीक कुछ ना कुछ कहने वाला है लग रहा है. What's the ADX on hourly chart in Nifty? It is showing a massive divergence. I have always told you, whenever such divergence comes up, more likely than not, somewhere down the line, ADX flattens itself out and moves upward. In that time, follow the dominant DMI, which gives you extremely good results. The ADX, which is at present showing you some divergence, might give you a major cue in coming week. Might be, it may take a day or two to materialize, but it would be worth waiting for it. The 14-period RSI on hourly chart is at a very important crucial zone. Yes, sir, it is just at the equilibrium line. Presently, the value is 49. The previous time RSI had moved up just below the equilibrium line and the result is in front of you. Let's see whether it sustains or not. In case it does not sustain, it signals the end of the uptrend. This particular indicator should be watched out, and most likely in 2 or 3 hours on Tuesday, a particular formation might be very much clear. Staying on with the hourly chart of Nifty, the horizontal line gives you the immediate support area, which is at around 12,950. I would be very careful of the Nifty if we break this particular level on a day trading time frame. Moving on to the derivative segments, the PCR has cooled off substantially. In fact, 1.28 is the present value. Going by the recent valuations it witnessed of 1.77 odd, I would say this is quite a comparatively low value. And if this sustains or continues to move downward, in that case, we might expect some correction in the market. If PCR again becomes healthy from here, an uptrend can be witnessed. But as of now, I would say it this way, this particular value does bring in some point of concern for the bulls. Well, before we move on from here, here's a small break and a small clip where I have my own commercial interest. Demystifying Candlesticks, a comprehensive course on Japanese candlesticks. It consists of 2 videos, the first one devoted to nomenclature and examples of same in the stocks and indices. The second video covers blended candles in details with examples of how it can be used effectively by traders. Thorough discussion on gaps and windows has been done for traders to get that extra short. Candlestick rules in support resistance have been discussed along with examples where trading opportunity arises. Candlesticks have been combined with trend lines, moving averages, RSI and ADX to sharpen and plan trading strategies. Do enroll and get started instantly to enrich yourself by demystifying candlesticks from the comfort of home at an extremely reasonable price. Welcome back. Open interest interpretation. This time it's quite a challenging one. Let's see it. 5% build up, 2.5% sharing, 7.45% build up, further again followed by 5.32% build up. What does it imply? Well, if you take it this way, in the last 4 days, open interest has certainly increased in a major way. Before that, in the uptrend, it was moving up with increase in open interest. I had showed you some 1 or 2 weeks back that we were flattening. The open interest did not build up at this particular juncture, whereas the market continued to move up. Currently, the market is moving nowhere and huge open interest build-up has taken place. From 12,062 to 12,017, if I take it in a broad way, somewhere around 40 to 45 points of decline from 24th of November to 27th of November has taken place. There is a major build-up in open interest. Next move, I believe, will be quite strong in nature and will be worth it. The ADX hourly charts are supporting my view, and so is my RSI. I would see whether RSI stays above the equilibrium line or not. I would see whether the ADX hourly chart is suggesting that within 1 or 2 days time period, perhaps we might have a very strong move. The RSI is suggesting that the equilibrium line holds the key. The OI buildup suggests something major may happen in next week. Let's see which way it moves. As of now, I would like to keep a neutral stand. Let the market tell me, yes, sir, I am moving in this way and I will follow it. Moving on to Bank Nifty, well, almost as same image of Nifty has been formed here. A small cross is witnessed on 27th of November. No major move on the upside, neither on the downside had taken place. Let's go to the weekly charts and check it out. The Bank Nifty on weekly charts is exhibiting advanced stalling pattern in Japanese candlestick. What does it mean? It means if you are long in this particular run-up, it would be advisable to book profit, but do not go short. Let the market turn for itself and then go short. But the very fact, and let me explain you what advanced stalling pattern is. It was a big candle. The candles gradually right now are smaller. As of now, the week ending 27th of November did not have a major healthy candle in any means, which indicates some profit taking is advisable here. Do not go short till you get a sell signal. Just like Nifty, here too, on the downside, the 13 SMA needs to be watched, and in this case also some flattening out signals are coming out. Well, I would say it this way, let it move below first, let the 13 SMA flatten out, and then we will say, yes, the uptrend has ended. In case Bank Nifty continues to move up, the level of 31,600 would be the next supply zone, and thereafter the all-time high of 32,613 might be tested. But as of now, weekly charts are saying it's stalling pattern, advanced stalling pattern. Long trades should be guarded closely. With this, we come to the end of this week's review. See you again next week. Bye.